Bonus shares are issued in order to capitalize the profits of the company. If you are using securities premium, capital reserve, profit and loss account, general reserve, so you debit these accounts and credit the bonus to shareholders account. The investment has been sold at a loss and the loss has been debited to profit and loss account. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this session 5 of Unit 1, we will be dealing with issue of bonus shares out of the capital redemption reserve. Now let us first understand what we mean by bonus shares. Bonus shares are the shares allotted to the existing equity shareholders without any consideration being received from them. They are issued to capitalize the profits of the company. It can be issued only if Articles of Association permit such an issue and only out of capital redemption reserve account and securities premium account. Now, bonus shares are issued in order to capitalize the profits of the company. Instead of just paying the preference shareholders or the equity shareholders with cash, company will be issuing it in the form of shares. So that we call it as the bonus shares. Now, the bonus shares is, what is the accounting treatment for bonus share? So from whatever amount, whatever the reserves you are using for the issue, you debit that reserve account and then credit the bonus to shareholders account should be credited. For example, you are using capital redemption reserve, you debit this account. If you are using securities premium, capital reserve, profit and loss account, general reserve, so you debit these accounts and credit the bonus to shareholders account. Now, the next entry will be issue of bonus shares, bonus shareholders account debtor to share capital account. So this will be the 2 extra entries which you will have to write for redemption. Now, we have a problem here. Anjali Abharana Limited has an authorized capital of 10 lakhs. The balance sheet on 31/3/2016 was as follows. So, we have the share capital, the preference share capital 1,50,000. So this becomes very, very important. Then we have the equity shares, securities premium account. So this also we have to make a note of. General reserve also we need to note. Profit and loss account also we need to note. So the trade payables and the total is 2 lakhs and 10 lakhs respectively. Now in the non-current assets we have the plant and machinery 4 lakhs, land and building 90,000, investments, inventory, trade receivables, cash and the total. Now in the next slide we have the additional information. On April 1st the company decided to redeem the whole of the preference share capital at a premium of 5% and for the purpose sold the investment realizing 97,500. On June 1st the company issued equity bonus shares fully paid in the ratio of 1 share for every equity share. Past journal entries to record the transactions. Now, first thing is we make a note of what is the information given here. So, we have the preference share capital. So, what is the preference share capital to be redeemed? 1,50,000. Then we have a 5% premium on this. So, that comes up to 7,500. So, the total will be 1,57,500. This is the amount needed for redemption. So 1,57,500. Now, first thing is we have to provide for the premium 7,500. So this we can provide it out of the securities premium account. So there is 1,35,000 in the securities premium account in the balance sheet. From this, I will deduct 7,500. So that takes care of the premium amount. Now I have the capital of 1,50,000. So the capital amount is 1,50,000. So this 1,50,000, I can take it from the, if you can see in the balance sheet, the general reserve, there is 1,60,000. From the general reserve, I am making use of the 1,50,000. General reserve, 1,50,000 I am making use of. So, I have made arrangement for the premium and for the payment of the capital. Then, next thing will be, we have to just write the journal entries here. So, since there is a sale of investment, the first journal entry will be for the sale of investment. So the first entry will be bank account debtor. Bank account debtor 97,500. Profit and loss account debtor 2,500. Then to investments account. To investments account 1 lakh. To investments account 1 lakh, being sale of investments at a loss. So the investment has been sold at a loss and the loss has been debited to profit and loss account. Then next entry will be, so just see here, so we have to provide for the premium out of securities premium account. So I write securities premium account debtor 7,500 to premium on redemption of preference shares account 7,500, being premium on premium amount, premium money provided out of securities premium account. So premium money we have paid out of the securities premium account. Then third one will be for provision of capital. So I just debit the general reserve account debtor. General reserve account debtor 1,50,000 to capital redemption reserve account 1,50,000, being divisible profits transferred to CRR account. So I have utilized 1,50,000 from the general reserve. So I am transferring then equal amount to capital redemption reserve account. Now the next entry will be for the money due to preference shareholders. So the fourth entry will be preference share capital account debtor 1,50,000, premium on redemption of preference shares debtor 7,500 to preference share holders account 1,57,500, being capital and premium money due to preference share holders. So this is the money due to preference shareholders. The last entry will be, the next entry will be for payment preference share holders account debtor 1,57,500 to bank account 1,57,500 being payment made to preference shareholders. So this is the payment made to preference shareholders. Now the next entry will be for issue of bonus shares. So for issuing bonus shares, so on June 1st, the company issued equity bonus shares fully paid in the ratio of 1 share for every equity share. Now for the issue of bonus shares, there is one entry here. So capital redemption reserve account debtor. Capital redemption reserve account debtor 1,50,000. See, we have the capital redemption reserve here 1,50,000. Then the next one will be securities premium account debtor. So out of 1,35,000, I have used 7,500. The rest of 1,27,500, I will be making use for the payment of bonus shares. Then general reserve account debtor 10,000. So how I got this 10,000, I'll explain in the working note. Then the next one will be, we have the profit and loss account. So out of this, we have utilized 12,000. Profit and loss account debtor 12,500. The total issue is 3 lakhs. So to bonus to shareholders account being bonus shares provided out of reserves. So we have used capital redemption reserve account, securities premium account, general reserve account, profit and loss account 12,500. So to issue a bonus share value of 3 lakhs. The last one entry will be bonus to shareholders account debtor. Bonus shareholders account debtor 3 lakhs to equity capital account, equity share capital 3 lakhs. So this is the extra journal entry you have to pass whenever there is an issue of bonus. So bonus shareholders account debtor 3 lakhs to equity share capital account 3 lakhs being bonus shares issued to the equity shareholders. Now, so next we have the amended balance sheet here. So here we have the equity shares of rupees 10 each. Old issue is 3 lakhs. Add bonus issue 3 lakhs. The total equity share comes up to 6 lakhs. So we are not writing preference share capital because it has already been redeemed. Then the securities premium account also we have utilized. So there is nil value because it has been issued for the use for the issue of bonus shares. Then in the profit and loss account, we are left with 40,000. So I will explain in the note. Then trade payables, it is 2 lakhs, total is 8 lakh 40. Then in the asset side, we have plant and machinery 4 lakhs, land and building we have 90,000, inventories 2 lakh 10,000, trade receivable 1 lakh 10,000, cash at bank is 30,000. I will explain in the working note. So 8 lakh 40,000. Now in the working note, we can see that capital redemption reserve, there is no fresh issue of shares for the purpose of redemption. The entire nominal value has to be redeemed. So that has been provided out of the divisible profits, namely the general reserve. So whatever redemption we have done, it is out of the general reserve only. So there is no fresh issue of equity shares. Now the bonus issue, the number of equity shares issued is fully paid, the ratio is 1 share for every equity share. So there are 30,000 equity shares, so you have to issue 30,000 bonus shares. So bonus share was 30,000 equity shares of rupees 10 each, fully paid. Then next is the reserves used for bonus issue. The value of bonus issue is 3 lakhs. Out of 3 lakhs, capital redemption reserve I have used 1 lakh 50. Securities premium 1 lakh 35,000. Out of that 7,500 I have used for payment of premium. 1 lakh 27,500 I am using. General reserve account 1 lakh 60. Out of that I have used 1 lakh 50. Then 10,000 is remaining. So 2,87,500 I have here. Then the rest of the money I am making use of from the profit and loss account 12,500. Then balance in profit and loss account to be shown here. So what is the opening balance here? 55,000. So the loss on sale of investments I am reducing from this 55,000. Amount used for issue of bonus share is 12,500. So totally it will be 15,000, which I am reducing. So this is the balance in profit and loss account. So out of 55,000, I have utilized 15,000. So the balance shown is 40,000. So what is the next bank balance after redemption? So opening balance is 90,000. I have to add the sale proceeds of investments. So the total comes up to 1,87,500. Out of this, I have paid the preference shareholders 1,57,500. The rest of the 30,000 is shown in the balance sheet of the capital. So balance sheet. Now we have one more problem here. In problem 10, let us see what is the preference share capital here. So the share capital is 4,500 equity shares of rupees 50 each, 6,500 12% redemption redeemable preference shares of 65,000. So this amount is important for us. Then we have the profit and loss account at 53,000. Trade payables 56,000, totally 3,99,500. So the next we have the assets. So fixed assets 3,50,000, investments 18,500. Cash balance is 31,000, so 3,99,500. So the additional information, in order to redeem the preference shares, the company decides to sell the investments for 16,000. Now what is the value of investments? 18,500. Then to leave a balance of 12,000 in the profit and loss account, to issue sufficient number of equity shares of rupees 50 each at a premium of rupees 13 per share to raise the funds required for the redemption. Then the equity shares were fully subscribed and the preference shares were redeemed at 10% premium. The directors then issued bonus shares to the equity shareholders. So 1 share for every 10 shares. Pass journal entries and prepare the balance sheet. So this is the additional information they have given here. Now what we have to make a note of is, what is the preference share capital? So preference share capital is 65,000, then plus 10% premium. So that will be 6,500. Total will be 71,500. So this is the amount needed for redemption. So amount needed for redemption is 71,500. So then for this, what are the various arrangements the company has made? The sale of investments. Sale of investments is at 16,000. They are selling the investments. Then they are making use of the P&L account, profit and loss account. The balance to be maintained is 12,000 balance to be maintained. The rest of the money they can use. Then to issue of equity shares. So issue of equity shares. So this they have to decide what is the number of equity shares to be given. Then there is a bonus issue also. So bonus shares are issued. For that we have to pass 2 more entries. Then before that we have to decide the number of equity shares we have to issue for the purpose of redemption. Now first thing is, we will write the journal entry for sale of investments. So investment bank account debtor 16,000 profit and loss account debtor 2500 to investments account. To investments account 18,500 being sale of investments at loss. So we have sold the investment at a loss. Then the next entry will be we have the P&L account balance to be utilized. So that we will write later. Then the issue of equity shares. So before we just have the issue of equity shares, so we have to have the calculation for issue of equity shares. Now here we have the fresh issue of equity shares. So what is the face value of preferential capital to be redeemed? It is 65,000. So if you can see the previous note here, divisible profit available for redemption is profit and loss account balance is 53,000 in the balance sheet. So what is the loss on sale? This we have to minus. This also we have to minus from this. So totally we will minus 14,500. So this 38,500 is the amount available for redemption out of the profit and loss account. Then next, so we have 65,000 less divisible profit available for redemption is 38,500. Total amount to be raised through fresh issue is 26,500. So this we have to deduct from this. So we get 26,500. Now equity shares to be issued will be, we are issuing 50 rupees equity share. So 26,500 divided by 50, 530 equity shares of rupees 50 each. So the premium collected on the issue will be 6,890. The premium on redemption will be 6,500. So this 6,500 I will make use of from this share premium account. So it is provided out of the securities premium account. Then next is the bonus issue. The number of equity shares, for every 10 shares held, there was a bonus issue. So the number of equity shares on the date of issue is, totally we had 5,030. 4,500 plus 530, 5,030. So bonus issue will be 1 share for every 10 shares. So into 1 by 10 of 5,030. So that will be 503 shares of rupees 50 each. So this is the bonus issue. So we are having a bonus issue here. Now what are the reserves for bonus issue? Capital redemption reserve, it is used, and security premium also is used. So the value of the bonus issue is 25,150. The balance in CRR account is 13,350. It should be carried forward and shown in the liability side of the balance sheet under the head reserves and surplus. So in the capital redemption reserve, we are making use of only 25,150. So the balance should be shown in the balance sheet. So the next will be, we will have the cash at bank after redemption. This we will see after when we prepare the balance sheet. So first thing is, we make a note of the journal entries here. The sale of investments at a loss. Then what will be the entry for issue of equity shares? So bank account debtor to equity share capital account, then to securities premium account, to securities premium account. Now how many shares we are issuing here? If you can see here, we having a new issue of 530 shares of rupees 50 each. So I write 530 into 50, then 530 into 13. So bank account debtor 33,390. Then to equity share capital So we have the equity share capital 530 into 50, 26,500. Securities premium account 6,890. So this is being fresh issue of equity shares. Now, first thing is we have to provide for the premium amount. So I write securities premium account debtor. So what is the premium money we need here? We need 6,500, right? So I write 6,500 to premium on redemption of preference shares. $6,500 being premium money provided out of securities premium account. So we are providing the premium money out of securities premium account. Now the next thing is we have to provide for the capital. So for the capital amount, so we have the capital amount of 65,000. So for this 65,000, we are issuing equity shares and we also have the profit and loss account. So we make use of the profit and loss account here. So profit and loss account data, if you can see the note here, profit and loss account balance is 53,000. So we're making use of 38,500. So that 38,500 I will write here. So profit and loss account debtor 38,500 to capital redemption reserve account. Redemption reserve account 38,500 being divisible profits transferred to CRR account. So we have transferred the profit and loss account to capital redemption reserve account. Then the next entry for money due to preference shareholders, I write preference share capital account debtor 65,000. Then premium on redemption of preference shares, premium on redemption of preference shares debtor 6,500 to preference share holders account. To preference shareholders account 71,500 being money due to preference shareholders. So this is the money due to preference shareholders. Then the next entry will be, so we are making use of the capital redemption reserve account. So we are making use, how much we are making use of here? So if you can see here in the working note, we have bonus issue here. So out of this bonus issue, for every 10 shares we are for every 10 shares held, we are issuing one bonus share. So 503 shares of rupees 50 each. So that comes up to 25,150, which will be debited to the capital redemption reserve account. So I can write it here. I will write capital redemption reserve account debtor 25,150 to bonus to equity shareholders account. 25,150 being bonus paid out of CRR account. Bonus paid out of CRR account. The next will be bonus to shareholders account debtor. 25,150 to equity share capital account. 25,150 being bonus transferred to equity share capital account. Being bonus transferred to equity share capital account. So these are the various journal entries we have to prepare. Now next, the balance sheet. So in the balance sheet, we have the old issue is 4,500 shares. The new issue is 530 shares. Then the bonus issue is 503 shares. So totally it will be 5,533 shares into 50. So when you do into 50, you get 2,76,650. Then from the profit and loss account, I leave a balance of 12,000. 42,000 has been used. The balance is 12,000. Capital redemption reserve. So out of the capital redemption reserve of 38,500, I have made use of 25,150. So the rest of the balance I have written here. Now in the securities premium account, if you can see here, there is a balance of 6,890. So in the securities premium account, 6,890 minus 6,500, 390 is the balance which will be shown in the balance sheet. Then trade payables 56,500. The total is 3,58,890. Then next, in the asset side, we have the 3,50,000 fixed assets. So cash equivalents 8,890. I will explain in the working note here. So if you can see this working note, I have already explained. This also I have explained. So I will show you the cash balance. Now what is the opening balance of cash here? 31,000. From the fresh issue of equity shares, we have collected 33,390. From sale proceeds, I have collected this. So the total amount collected is 80,390. So the amount paid to preferential shareholders is 71,500. The cash at bank after redemption is, this is shown in the balance sheet. So I have shown 8,890 in the balance sheet. The securities premium account 6,890. I have made use of 6,500. The balance 390. I have shown it in the balance sheet. So with this, we come to the end of this session. Hope you have all followed it. Thank you.